A top Wall Street analyst, Dan Ives, says, "We were dead wrong expecting Musk and the team to step up like adults in the room and give a strategic and financial overview of the ongoing price cuts, margin structure, and fluctuating demand. Instead, we got a high-level view with another train wreck conference call for the street, cutting the price target to $315. From $350, how does Tesla dare to think long term? I am betting with my whole stock portfolio in Tesla stock that today is a huge buying opportunity if one is willing to hold Tesla stock for 5 to 10 years. And look, Gary Black criticizes Tesla a lot and he cares so much about the short term. He does care about long term too, but I think he does care more about short term and medium term. And look what he's saying. Q4 results were better than expected. But management's decision to not provide 2024 production guidance and uncertainty about Tesla's 2024 pricing philosophy and tax rate will likely cause further weakness, which happened. And check out this post from yesterday. According to Gary Black, automotive gross margin excluding regulatory credits is the most important metric we should be watching in Tesla's earnings. Troy estimated 15.7%, Gary Black 16.1%, Wall Street 16.7%. The actual number was 17.2%, and Gary says that this is a sign that gross margins have bottomed. But Elon's negative comments about high interest rates and car payments being too high will cause more pricing uncertainty, so potentially more price cuts. Elon suggested that the next generation vehicle will enter production in late 2025 in Austin, and he indicated that Optimus Bot first deliveries could also begin in 2025. But generally, this is the reaction from most people. Guys, let me be clear. 0 Optimus shipments next year. The way I think about Optimus is Tesla is an extremely innovative company, especially if Elon stays at Tesla for a long time. There will be products in the future that Tesla will work on that right now we have no idea about. Some of them will fail, some of them will succeed wildly. Optimus could be one of those that succeeds. And I think Kevin here nailed it. In the near term, Tesla stock is merely a call option on interest rates, meaning if interest rates go up, Tesla stock down. If interest rates go down, Tesla stock up. In the long term, Tesla stock is a call option on the future. And if you are optimistic about the future, why wouldn't you be optimistic about Tesla then? Dojo could be another one of those things. Now, I don't really put Dojo in my Tesla valuation model. I think there is a chance that it will succeed in a big way, but Elon did admit on the earnings call that it's a long shot. But keep in mind, Elon says the odds of success are low for many of his ambitious ventures, but they eventually succeed anyway. Tesla was one of them. And I stayed away from Tesla until early 2019 because I agreed with Elon. I did not really the main thing for me is my risk tolerance is not exactly very high. And if I don't see the company making profits, if I think that there's a very good chance of the company going bankrupt, or not even necessarily a great chance, but let's say a 10% chance that the company is going to go bankrupt, do I want to be all in that company? Probably not. But if I think that there's less than 1% chance that 10 years from now, I will lose money owning a stock, but at the same time having very high odds of the stock doubling, tripling, quadrupling, 5xing, Elon thinks that there's a good chance that Tesla will be the world's biggest company, which would make it bigger than Apple, which would make Tesla stock more than 5x. And I don't think that the biggest company will stay just at $3 trillion in terms of the market cap. So that naturally implies a lot more than just the stock going up 5 times. And if Tesla really figures out full self-driving, and on top of that, if Tesla figures out Optimus, which Elon Musk seems to really believe in, if these two things happen, it would be hard to imagine how the stock would not more than 10x. So my logic goes, okay, I hold the stock for 10 years, less than 1% chance of me ending up with less money, but there's so much opportunity, and I'm betting on the world's smartest, most talented engineer with an incredible track record of doing the impossible over and over and over and over again. Now, I personally think that one of the best things that can ever happen to a man is to be deeply in love with a woman. And almost every such man will be familiar with astrology. So let's talk stock astrology. This is a moving average, and generally speaking, every time Tesla stock drops below that moving average, it has turned out to be a great idea to buy it, especially if it drops about 30% below that moving average. And currently 30% below the moving average would be $153 per share. And that's one of the ways that I use to determine, is Tesla stock right now, based on the sentiment and based on what traders think, is it a big discount in the short term? We're getting there. We are not quite fully there, but we are getting there. And of course, I am buying Tesla stock. Oh, but man, I am not buying anymore. I am all in already. I cannot buy anymore. This stock sucks. If you buy Tesla stock and you have not held the stock for 6.4 years yet, why are you complaining? Literally, just looking at Tesla's history, there was a period of about 5-ish years where you could have bought Tesla stock and then lost money 5 years later. And some people sold. And they missed out on 10x gains. So if I have a strategy and I am executing based on that strategy, I do not want to change that strategy in the middle of it because the market feels a certain way. Now, mind you, when I say I believe there's less than 1% chance of me losing money being in Tesla stock in the next roughly 10 years, it does not mean that losing money is impossible. I literally mean there's a less than 1% chance of that happening. It is not impossible. And in my case, if I could find another company where I found the same odds, I would then just buy 100 companies like that. But I don't think that exists. And my background is being an entrepreneur. And when you start a company, you face incredible risk. I have never started a company with a chance of failure being less than 1%. The risk is always 5%, 10%, maybe 20%. But if the numbers make sense, then it makes sense to follow the numbers. Is Tesla going to release the next generation vehicle? Yes. Is that vehicle going to crush the competition? Absolutely. Is it possible that that project may be delayed? Has every single project by Tesla, has it been delayed? Well, I would keep my expectations in line with what happened before. And despite these delays in the past, did Tesla still annihilate many of the expectations that, for example, the Tesla bears had? Absolutely. Is the world going towards EVs? Yes. Which means naturally, even if Tesla doesn't really do much, growth will still be enormous. Currently, everyone is looking at 2024 volume, and there's no guidance from Tesla right now on the volume or margins, which is what Gary Black believes is driving the stock down today. Currently, the consensus for 2024 is 17% growth in terms of deliveries, and Tesla's management refused to close the door on future price cuts on the conference call yesterday, which to me indicates if Tesla changes its strategy a little bit and just goes really deep with advertising and gets really innovative with it, there are going to be a lot more sales and the stock is likely to go up. And Tesla did talk about advertising a little bit on the call. Now, specifically on 2024 guidance, this is what Tesla said. Our company is currently between two major growth waves. The first one began with the global expansion of the Model 3 and Y platform, and the next one we believe will be initiated by the global expansion of the next generation vehicle platform. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle at Gigafactory Texas in 2024. The growth rate of deployments and revenue in our energy storage business should outpace the automotive business. That business is not going to be valued highly until the actual revenues will be really high. It's going to get there, but it's going to take some time. Tesla, by the way, has 2.35 million in annual installed production capacity. If Tesla produces that many vehicles and deliveries are good, it's possible for Tesla to grow 30% year over year, but I don't think that Tesla is quite expecting that in 2024. I will be updating my Tesla valuation model on Patreon. If you are inside, then you know that I have been always expecting less than 30% growth for Tesla volume in 2024. So seeing these lower expectations from Tesla is not surprising to me at all. Tesla said that in Q3, our global production reached a record annualized run rate of nearly 2 million vehicles in Q4. And Tesla is focused on bringing the next generation platform to market as quickly as possible with the plan to start production in Gigafactory Texas. This platform will revolutionize how vehicles are manufactured. Big words.